Hello everyone, today is the 28th of July 2021, and in this midweek markets outlook video, we are going to run you through our weekly forecast and how it has developed so far and what will be the trading plan going forward. Alright, so let's take a look at Euro against the US dollar. Alright, so let's go ahead and click the play button. This is the weekly time frame. As you can see that this week the price has been kind of slightly bullish, but then we are also seeing resistance at the top right here. So what we're actually seeing is that the price, because it has already completed this arrow wave 1 2 3 4 5 finish, and it has started to form this ABC correction. So we are expecting the price to come all the way down until we reach this demand zone before we actually rebound and turn into a bullish trend. So now let's take a look at the chart and see what's going on right now. Now, one thing I want to bring attention to is that when it was completing the fifth arrow wave right here, it is actually forming somewhat like a falling wedge, alright, or some may even see as a Elliott triangle wave, right? So there's multiple waves, alright. And so price completed at E point right here, at point E right here, found support and rebounded off, and then we are seeing a breakout of this structure as well as the falling wedge itself, and therefore this might actually help to boost the Euro US dollar from here. Alright, so what we're going to do going forward is that we'll be waiting for a pullback, alright, further pullback, and try to look for a buy opportunity somewhere right here where it touches the falling wedge again, and probably that will have some good demand for us to buy it again. So as you can see, in the 1 hour time frame, we have already seen the price pull back once, and then it pulled back the second time. It rebounded off at first, but then right now it comes back down again. Well, I think that's to be expected because today we have the FOMC, and therefore the market is going to be whippy. Unlikely there will be any trend before the FOMC itself, and therefore that gives us an opportunity to look for a lower price to actually buy the euro dollar. And of course we can always make use of a trend line right here as a support, all right, to buy the Euro US dollar. All right, so the plan we will be looking to buy right here, all right, within this zone. Stop loss I think will have to be at least below the low right here, and you can also see that if you pull out a Fibonacci from the swing low right here all the way to the swing high, alright, that will be somewhere between 61.8 and 70.6%. Of course, we can also consider to take the swing low right here instead, and then coming back to the swing high. That will have another 61.8% level, which will then bring us to this area itself all the way to 17.6. So this entire region will be an important level for us to look for buying opportunity, and therefore that is the trading plan. So if you want to buy, alright, somewhere within this region, just make sure your stop loss is below the low right here, and as much as possible maybe somewhere at 88.6% of this swing low to the swing high based on Fibonacci. Alright, so that's for the euro against the US dollar. Alright, next we have to go. Let's go ahead and click on the play button. Alright, so this daily time frame, as you can see, price came down a little bit, found a little bit of support and started to go up, but then obviously there's resistance again. So at the end of the day, it's just consolidation without any obvious trend at all. So in our weekly forecast, we are actually expecting the price to come down a little bit more into the demand zone at the bottom, or rather to do something like a fake out at this resistance turn support level before it actually continues to go up. And the reason why we are seeing that it is likely to go up is because that this area itself also has completed a arrow wave right here, and so in any case, this is just one entire wave of a bearish trend, and the price has pulled back once right here. So this is the correction, and what we are expecting is that the price will continue to form another pullback and essentially complete a ABC correction, or it can also be a AB equals to CD pullback formation as well. So therefore we are actually anticipating to buy as it retest this area, which is also very important, right? Because since the price break above this level and come down and it has found supports, then of course I think there will be an opportunity to buy at such a good support level. And this support has been around for really couple of days already, so that shows that it's a pretty strong support as well. So let's go ahead and take a look at the gold chart itself. So right here in the, let's take a look at the 4-week time frame. All right, if we look at the 4-week time frame right here, and we will deploy a trend line, right, from this swing high, and then we just try to connect. Right now, we are really seeing that the price has been resisted pretty well. Price came up today, all right, found resistance, came down again, and so we are expecting the price to retest the low right here again, and very possibly because of FOMC itself, there might be some fake out before it actually goes up. So the trading plan, right, if we look at the 1 hourly time frame, we can definitely look to buy again as the price come down again. All right, there's always a possibility that it will retest the low and then it just go up and eventually break higher. But of course, based on the behavior pattern of the gold, all right, usually it likes to do some kind of breakout, a fake out before you actually move in the intended direction, and this itself might also form a falling channel right here, or the pullback channel. And if we were to pull out a Fibonacci from the swing low all the way to the swing high right here, the 61.8 and the 70.6% region is somewhere right here as well. So which is why I think that there's a possibility that it will come down even further, all right, come all the way back into this range before you actually found a stronger support and stronger demand for the price to really go up from there. All right, so trading plan will really be, we want to wait for the price to reach at least the 61.8% level, and of course in between 61.8 and 70.6%. So somewhere here you want to buy, and stop loss you can just set it right below the zone right here, right? So or somewhere near to 88.6%, and then you can actually just try to hold this trade all the way until it, well, at least when it comes to the previous high, and even essentially it might, all right, complete this another bullish waves just like this, and that will also bring us back to the equilibrium level at about 1850. All right, so that's the gold trading plan. All right, next we have the WTI. All right, so for the WTI, we are expecting the price to actually go out a little bit further, and eventually it might find some important supply right here, and for the price to go down, because this is a very important neckline area, I would say, and price has been kind of resisted at even this area and still consolidating. And very importantly is that it has actually broke below, right, this riding channel, right, started from last year November. All right, so therefore this breakout has to be carefully observed, and definitely is an important breakout. So we thought that the oil price, and especially because OPEC Plus is trying to increase the supply to stabilize the price, and of course the Delta variant that might actually hamper the demand of the oil. But of course in the long run, the long term, we are definitely expecting the oil price to continue to climb in the long run. So but in any case, during this period of time, we are expecting it to kind of range for a period of time. Something like what happened right here, the price may consolidate for a period of time before it actually start to climb again from there. So for today, we are still looking to sell. And let's just go ahead and take a look at the WTI chart. So as you can see, all right, after price has reached this level, there has been constant resistance right here. Price make a little bit of attempt to go higher, then it comes down a little bit. But in the case, we're just still waiting, right? If you pull a Fibonacci, all right, again from the swing high to the swing low, all right, this is actually the 61.8% level. Already we are seeing resistance right here. So who knows, maybe later on during the US session, the price may really start to go down from here. So in any case, we're already seeing a lot of resistance at this region, and apparently not much buyer as well. So very high chance, a possibility for the price to come down. In fact, if you look at the 1 hourly time frame, you can also see that there is an added wave forming right here. Right, this is a second, and then the final wave is actually forming right here. Maybe right after it completes this this pullback formation, and then that's where it will really start to go down. So this is the plan. It's at a good level, 61.8% of the swing high all the way to the swing low right here, and so that will be the trading plan. So essentially you want to look to sell somewhere right here. All right, stop loss just you have to be slightly higher. I would say about this area itself will be good enough. It's way it's a lot higher than this trend line already. So in terms of take profit level, I think first we want to look at somewhere right here, because obviously there are a lot of support at this region All right, you can see at 70.6 all the way down, all right, to this level where actually break out of this entire range right here. Okay, so that will be the final level we are looking at. So that's the trading plan for the US oil. Alright, next we have the Nasdaq. So just go ahead and click on the play button. We already seen that Nasdaq has some sort of a sell-off already happening yesterday. Price came down. Right now the price is pulling back a little bit again. Now for this week we are really focusing on selling the Nasdaq. Not because that we thought that that there will be a market crash or something like this. I don't think that's going to happen anytime soon. But I think that there will be a very major pullback from here. Because if you look at the entire formation right here, you can see that every time it completes a period of very bullish trend, you'll go into ABC correction, and then it forms another arrow wave, right? Then another ABC correction, and right here it has just completed another arrow wave right here. So therefore, after finishing the final wave, of course we might also be expecting it to do a pullback similar to what has happened previously. So therefore we are expecting a huge pullback right here, and therefore we are looking to sell. Alright, so let's go ahead and take a look at the Nasdaq. So yesterday, alright, we have seen a very strong bearish trend right here. Price came all the way down, and as of now, alright, the price has already pulled back once, alright, consolidated a little bit, and right now it has went up again, found support again, and then what we see is that it's very likely to go up again and retest the resistance level right at right at the top here, 15,100 to 15,200, and that's where we want to look for a selling opportunity. Alright, so if we were to go ahead and pull out Fibonacci, alright, from the swing high all the way to the swing low right here, right now the price is seeing kind of resisted at the 61.8% level. But however, we want to understand that the neckline, alright, is actually right here. So that will be at the 78.6% level. And of course, if we were to put a trend line, alright, and connecting all these all these lows right here, we are essentially seeing the breakout is somewhere within this area itself. So potentially, so it's very possible that this time around 61% level may not work out that well, although yes, there's still strong resistance right here previously, so we don't just ignore this level. It might be the case that the price may just get resisted at this area, consolidates, and then it start to go down. But then again, for the better price and based on the breakout area, this is the best price that we're actually looking at, in between 70.6 and 88.6% level, and therefore this based on, and so the trading plan is really still that we want to wait for the a further pullback, right? And somewhere into this region, we just have to set our stop loss right above the high right here, and essentially our targets, all right, we can see all the way back to somewhere right here where there's support for the price that goes up, and then eventually back to the previous low. And of course, if you look at the 4-hourly time frame, and if we and what we're expecting is a very huge pullback right here. So going all the way down, it will be somewhere right here where this is where the price actually broke out of this area, and therefore right here there might be a strong demand zone as well. All right, so that will be the final target as for today, but eventually we'll actually go even lower. All right, that at least we have to see a stronger bearish trend forming right here before we can actually decide whether we want to sell and determine whether there's really going to be a very strong a stronger pullback from there. All right, so that will be the trading plan for the Nasdaq. Alright, last but not least, we have the Bitcoin. Alright, so the Bitcoin, we expect the price goes up even higher. But however, we are actually looking to sell at this supply zone right here at 39,000 to 40,000. But obviously, the buying is actually pretty strong, right? Ever since those crypto market leaders such as Elon Musk or Cathie Wood, and for some reason price just keeps on going up, alright, and it is about to reach the previous high right here. So I just want you guys to take note that this resistance level at 49,900, or just make it 42,000, is very important. Alright, as you can see, this is a very important resistance all the way back in early 2021 this year, and then there's also resistance right here, and when the price reaches this area itself, I think there's a good chance for us to try to sell the Bitcoin again. So that's essentially what we are looking at. And based on the weekly forecast, honestly, we still think that it's still too soon, too early for Bitcoin to actually start to rise again and potentially go all the way up and break higher. Rather, we are not looking at this. We are actually expecting to go even lower. All right, because at the end of the day, because Bitcoin, in terms of the price, in terms of the pullback, right now it's only at 55%, right? It's not even reaching 60 or not 70%. But if you look at the history, right, of Bitcoin itself, you'll see that a 70% pullback, 80% pullback, or even 90% pullback is very likely to happen, and usually it's after that we'll really see a stronger bullish run from there. All right, but again, it's really hard to say. But in any case, what we are seeing is that price completed one wave, second wave, then it goes in consolidation. After it pulls back again, it might head down for the final wave, and that is what we are actually looking at. Alright, so now let's take a look at the Bitcoin charts itself. Alright, so you can see that as the price reaches this level at the top, there's already strong resistance, quite a strong sell-off right here before the price continues to go up. So right now, technically speaking, we are already at the resistance level. This is 40,000. Alright, but again, as we have just mentioned, alright, this level, if we push it a little bit higher, alright, to the high right here, that will be about 41,000. If you go a little bit higher, that will be about 42,000. So that's really the main price that we want to look to sell again. So since the Bitcoin is so bullish right now, we do expect it to go a little bit higher. Alright, once it reaches this level, that's where we really want to attempt a sell. Alright, so that's the trading plan. Stop loss, right, just have to be right above the resistance level right here. And in terms of the take profit level, alright, wait for the price to come down, retest this area, alright, because this is where the price breakout of this consolidation and goes up a little bit more. So just be careful, there might be some demand, but other than that, right, we can actually wait. We actually want to take profit somewhere right here instead, alright, where this is the equilibrium of this entire range, and so that will be the main target we are looking at. But essentially, if you believe that the Bitcoin will continue to go lower and eventually break lower to a much lower price, then you can really hold it for quite a long time. But I mean, in terms of intraday trading or swing trading, I think somewhere by the equilibrium level will be very good. Alright, so that's all for this midweek market outlook. Alright, thanks for watching. Hit the like button and subscribe to our channel if you like it. And we'll see you again in our weekly trading forecast.